Today, new home lending commitments up again. Hello again, it's Martin North from Digital Finance Analytics. Welcome to this post covering finance and property news with a distinctively Australian flavour. The ABS has released their latest new loan commitments series for housing. It rose 3.7% in April 2021, that's seasonally adjusted, and that is a record high of $31 billion. According to statistics from the Australian Bureau of Statistics. The value of new loan commitments for owner-occupied housing reached another all-time high, up 4.3% in April to $23 billion, and new loan commitments for investors rose 2.1% to $8.1 billion, which was the highest level since middle of 2017. The rise in owner-occupied lending was driven by increased loan commitments for existing dwellings, which rose 9.2%, and loan commitments to owner-occupiers for the construction of new dwellings fell by 11.4%, following a fall of 14.8% in March. These were the first monthly declines since the Home Builder Grant was introduced in June 2020. However, the value of construction commitments remained at a high level. The Home Builder Grant, of course, was reduced from $25,000 to $15,000 effective from the 1st of January 21 and was closed to new applicants from the 14th of April 2021. Looking in more detail at the first home buyer data, the number of owner-occupied first home buyer loan commitments fell 1.9% to 15,171 in April. While this was the third consecutive month of decline, the number of commitments remained at their highest level since July 2009. An 8.6% rise in New South Wales and an 8.4% rise in Victoria accounted for the majority of the rise in owner-occupied housing loan commitments across Australia. And commitments in Western Australia fell 7.9% after a fall of 5.1% in March. The Building Bonus Grant, which was offered in WA in addition to the Federal Home Builder Grant, ceased after the 31st of December 2021. And finally, personal finance loan commitments showed that the value of new loan commitments for fixed-term personal finance rose 4.8% in April 21, again seasonally adjusted. This was driven by lending for personal investment, which rose 25.2%, and lending for road vehicles, which rose just 3.6%. So you can see that it's all about housing still, but there is a rotation now in play between property investors and first-time buyers. And I think first-time buyers are going to find it even more difficult ahead as the investor community starts to wake from its slumber, despite the fact, of course, that many investors are still underwater, and the fact that many first-time buyers are finding it very hard to get into the market because of rising prices and because of lending constraints. And of course, true to form, the HIA came out with their typical bullish positive statement saying the number of loans for the construction of new dwellings fell in April for the second consecutive month, according to the HIA economist Angela Lillicrap. The ABS released its data on lending indicators for the month of April today. This is the first ABS data to show that we are past the peak in the surge of construction due to home builder, added Ms. Lillicrap. The cooling of construction loans is consistent across all the states and territories. First home buyer activity has also eased back from its elevated levels, declining by 1.9% in April. Until recently, first home buyers have been the driving force in the market as they took advantage of low interest rates and various government incentives. Lending for renovations continues to be strong. The value of loans for alterations and additions is up by 66.7% in the 3 months to April 21 compared to the same time last year. Households have diverted funds that would have typically been spent on overseas travel into buying a new home or improving their existing one. The number of loans to owner-occupiers for established dwellings continues to increase, reaching the highest level since 2007. This indicates that confidence in the housing market more broadly is strong. Low interest rates and strong house price growth will continue to support demand for new housing, concluded Mr. Lee Krapp. Across the states, the number of dwellings to owner-occupiers for the construction of new dwellings in the 3 months to April 21 compared to the same time last year was, and this is where they really have a field day, more than tripled in Western Australia, up 230.5%, almost tripled in South Australia, up 198.2%, and Tasmania, up 185.8%, more than doubled in Queensland, up 145%, the Northern Territory up 132.8%, and the Australian Capital Territory up 127.9%. And they doubled in Victoria, up 99.4%, and almost doubled in New South Wales, up 73.6%. And here you see the magic of government stimulus and low interest rates and an absolute focus on supporting the poor old construction sector. It's just a pity that the net result of all this is going to be higher house prices and more debt, but that's a whole other story. I'm Martin North from Digital Finance Analytics. Many thanks for watching, and I'll see you again next time.